Stocks swing between gains and losses as IT drags, but real economy plays in energy, utilities, consumer durables, and metals. Offsets the impact. In fact, advances after outstrip the declines in today's trading session, keeping the positive sentiment intact.
Anthropic's latest plugins for cloud co-work that automate data analysis trigger a slide in IT stocks as disruption fears resurface. Analysts see lesser impact for Indian IT services but suggest some derating.
Fractal Analytics is eyeing a scaled-back valuation of near rupees 15,000 crores for its IPO. This comes after it trimmed the IPO size by over 40% as initial expectations of a rush for India's first AI company offers temper.
Gold posts its biggest single-day gain since 2008, climbing 6% overnight and rushing past the $5,000 mark. Rising US-Iran tension and continuing demand for the physical metals, including from central banks, aids the rebound. Hello and welcome to Halftime Report live from the CNBC-TV18 Motilal's Oswal studio. I'm Sonal Bhutra. With me as always is Vinny Motiwala. Well, a lot of cues that we've been tracking overnight. The big fall that we've seen in IT names, that will continue to be the big story that we'll be tracking through the course of the show as well. But for now, markets have recovered from the lows. It's a 160-point recovery from the lows of the day. After that, it did see some fall, and then again, there was some recovery from the lows. So it's been quite volatile since the word go, but yes, that recovery is something that we should be considering the fact that IT is a big weight on the index, and despite that it is in the green or at least flattish as of now. The contribution chart that should come up for you on the screen. Despite that 7% fall in Nifty IT as we speak, there are a couple of names which are doing well. We have the oil and gas space which is surging. That index is up around 2%. We have the CPSE basket which is doing well as well. So the banking names, Reliance Industries, these are the ones which are contributing to the gains from the lows that we are seeing. We do have only IT names which are the biggest draggers in trade today. We do have infra, auto, consumption, metals index. They continue to do well. And mid caps and small caps today, they are outperforming the benchmark, which has not been the case for a long time.
Has not been the case for a long time. Sonal, good afternoon to you as well. So yes, surely mid and small caps, that's where the outperformance. On that note, let's look at the advance decline ratio, right? Because that's clearly in the favor of advances versus decline in today's trading session. So more of the green on the screen versus the red. IT clearly, Sonal mentioned, is what is under pressure. Some of the bright spots that I do want to highlight as well, some of these names coming in from the cap good space, whether you look at the Siemens Energy, GE Vernova, they're managing to hold on to good gains in today's trading session as well. When you look at it in terms of other names, EMS players like Dixon, Keynes, they also are managing to hold on to gains. So let's watch out for that. But that's what the market setup is looking like. What's on the show for you all today? We have a very exciting lineup, right? We're going to put the spotlight on Fractal Analytics IPO, which opens up for subscription on February 9th. Then we'll bring you a conversation my colleague Rima had with the management as well. Now, we'll also speak with the management of Office Spaces Solutions and Mahindra Lifespaces on the back of their Q3 earnings. And in our Commodity Corner segment, Manisha Gupta will speak to the World Gold Council's Sachin Jain on the rebound seen in gold prices. Okay, but on that note, let's talk about HAL. That's the one that is in focus today, and it's a bit under pressure. And this is coming as reports are suggesting that the company is knocked out of AMCA race. Now, what does... Okay, so we'll go back to Ria, but we have Piyush Goyal, who is speaking as well right now. Let's go cross and listen to what he has to say.
दोनों पक्षों के महत्वपूर्ण और विविध हितों को देखते हुए यह स्वाभाविक है कि दोनों पक्ष अपनी अपनी अर्थव्यवस्थाओं के महत्वपूर्ण और संवेदनशील क्षेत्रों की रक्षा करते हुए सर्वोत्तम संभव परिणाम सुनिश्चित करना चाहेंगे। इन वार्ताओं के दौरान भारतीय पक्ष अपने संवेदनशील क्षेत्रों विशेषकर कृषि और दुग्ध क्षेत्रों के हितों की रक्षा सुनिश्चित करने में सफल रहा है। अमेरिकी पक्ष के भी कुछ ऐसे क्षेत्र थे जो उनके दृष्टिकोण से संवेदनशील थे। लगभग 1 वर्ष तक चले कई दौर के विचार विमर्श के बाद दोनों वार्ताकार दल द्विपक्षीय व्यापार समझौते के कई क्षेत्रों को अंतिम रूप देने में सफल रहे। 2 फरवरी 2026 को प्रधानमंत्री जी और अमेरिकी राष्ट्रपति डोनाल्ड ट्रंप ने द्विपक्षीय और अंतर्राष्ट्रीय महत्व के कई मुद्दों पर फोन पर चर्चा की।
Okay, all right. That's the word coming in from the Commerce Minister on the timeline for the US-India trade deal. We'll cut back if there are more details which are available. For now, let's go back to what's happening in the markets. Of course, US-India trade deal, rather, nitty-gritties of that deal continue to remain the big focus point. But we do have HCL, which is under pressure. Reports suggest the company is knocked out of the AMCA race. Ria's telling us more on this one. What does this mean? And what has the company said about it? Ria?
Well, yes, HCL has indeed been knocked out of the race for AMCA, and this is as per industry reports that have been confirmed by analysts, and this is why the street is reacting so negatively to the stock today. Now, HCL was expected to be the front runner for the program up until now, and they have bid for this had bid for this program with 2 other smaller firms. Now, this will also be the first time that HCL will not be involved in one of the country's most significant military projects, and the other bidders for this project include Tata Advanced Systems, Adani Defence and Aerospace, as well as MTAR Technologies, L&T and BEL, and even Bharat Forge in partnership with BEML and Data Patterns, among some other companies. Now, as per reports, 3 of these companies have been shortlisted for the project, and the final project winner is expected to be disclosed within the next 3 months. Now, as far as the details of the AMCA project go, the total development cost for the prototype has been valued at 15,000 crores, and the total project cost will be between 1.5 to 2 lakh crores. So this is quite a significant project that HCL has now been knocked out of the race for. And in terms of the impact for HCL, as per analysts, this will only be sentimentally negative for HCL, and they do not expect any material impact on the financials of the company. Remember, the total order book of the company stands at roughly 1.9 lakh crore rupees as of the end of FY25, and FY26 is expected to be closed at roughly 2.5 to 2.6 lakh crores for a total order book for HCL. So they already do have a very strong order book, but nonetheless, the stock is down roughly 5.5 to 6% in trade today.
Okay, Ria, thank you so much for that. But on that note, we're going to step into a very short break. After the break, we'll come back and connect with the management of Awfis Spaces. Stay tuned for that conversation.
Welcome back. You're still tuned into Halftime Report. Let's get some corporate conversations going. Amit Ramani, who's the chairman and MD at Awfis Space Solutions, is joining us now. Reported a good set of numbers this time around in Q3. If we look at the numbers, their EBITDA was up 30%. That's on reported basis. Even normalized EBITDA was up 18% after adjusting for Ind AS. Amit, always a pleasure speaking with you. Thank you so much for joining us today. And you know, you have ended 9 months on a strong note. Can you give us a sense of what the FY26 outlook is looking like? And if now you have more clarity on FY27 as well, because we're almost done with FY26, what kind of seat additions, revenue growth and margin outlook are you looking at?
So the guidance for our FY26 continues to remain what we had given originally, about a 30% growth for the overall business. As you see in the 9-month period, actually the co-working and allied services grew much faster at about almost 38%. And for the quarter as well, it grew at about 32%. So continuing to see great growth momentum in our co-working business. Also for FY27, at this point, I wouldn't like to comment. We will give that guidance in the Q4 results because we are still planning our annual operating plan there. And the sector overall seems extremely bullish. As you can see, the growth in every sector related to GCC, as well as if you look at now, even with the budget, with the AI and the data center companies and the solutioning that is going to provide tax holidays is only going to help and improve the sector.
Okay, that's going to help and improve the sectors, surely. Just wanted some numbers. Right now, I think you have 152,000 seats, right? When do we expect this number to double from here, Amit?
I can't comment on when it doubles, but,
I'm sure you have some internal target at least, yeah? You're aiming for yourself?
No, so we last year added about 40,000 seats. This year, our seat addition is about 32,000. And that's specifically because, we are at the highest cycle of the commercial real estate in terms of rentals. So we've been a bit cautious about it. And again, our growth targets remains the same, but we were a bit cautious. So 32,000 for this year. Next year, we will provide that guidance in the next quarter itself.
Okay, so since you said you are at the highest level of commercial rentals, even volumes and pricing are going in tandem, right? So I wanted to understand what would the risks to some of the big opportunities that there are in the industry currently? Would it be pricing decline? Would it be volume decline? How are you seeing the industry shape up going forward since we've seen a big surge already?
So I think the industry bases a lot of things that have gone in the macro environment, right? I think the trade deal happened. The budget was very supportive of foreign investments coming in. The GCC boom. I mean, if you look at the GCCs, there are about 2,900 GCCs. Every quarter, we are adding 25 to 30 new GCCs. Projection is by 2030, we would have close to about 4,500 GCCs employing 2.8 million people from 1.5 million today. So I think the growth engines and the drivers for co-working, overall for commercial real estate, are very strong. I think for co-working, it's the first port of call, especially for the first-time GCCs. They do not have their teams in India. And as a result, co-working and Flex provides a great solutioning. Today, we have been able to do 12 GCCs, first-time GCCs, 11 more on pipeline. If you look at the overall revenue, 21% of our revenue comes from GCCs, which is about 80 plus companies in our portfolio today. So I think very bullish overall for the sector and as well as for our own growth.
So quickly, if you can tell us, how long does it take for a new center to break even, Amit? And considering that, since Vinny spoke to you about doubling those seats, 32 to 40,000 on an annual basis, do you think next 3 years we can look at 3 lakh seats for Awfis?
Well, we would want to obviously, grow in that direction. But I think there's a very clear, approach that we are taking where we have to balance the seat addition with the growth and the profitability at the same time. If you look at our numbers, we did about 22 crores of, PAT at this point. And we are almost for the year or 9-month period, we are almost 50 crores of PAT. So I think for us, balancing the two, a decent amount of growth, 25-30%, while balancing seat addition is very critical. If you look at our even today's seats that we have added, it's enough for us to demonstrate a 25 to 30% growth for FY27. Exact guidance we will give, but today we still have seat capacity to fill, which will allow us to grow at that pace.
Okay, already enough seat capacity addition. Hoping next quarter you give us guidance, but as of now, 30% guidance for FY26 is what you're talking to us about, as well as going forward 25 to 30% in FY27 as well. Amit, thank you so much for joining us on the show as always and speaking with us in terms of your numbers. But yes, that's the management of Office Spaces for you all on the channel. But let's move on. And AI, that's what we'll be talking about. We always talk about that. Today we've seen IT stocks that are seeing a bit of an impact coming in here, but we have an IPO that's coming up as well. Fractal Analytics, India's first pure play enterprise AI company. 2,833 crores of IPO, which they're looking to raise, will open up on February 9th. It will be a combination of fresh issue as well as OFS. In fact, Rima caught up with the top management of Fractal Analytics and began by asking about the Anthropic new AI tool and how it could impact their business model as well. Listen in.
There are many companies that will come in that will leverage the power of AI to solve specific problems in a more effective way and therefore build out a great business of theirs. So Anthropic is doing in a few areas, Fractal is doing in a few areas, and other companies will do it in other areas as well.
But they have multi-billion-dollar R&D companies. So today they're doing it in a few areas. Tomorrow it'll be in all the areas, including the spaces that you operate in, like Vedya for healthcare. Isn't there going to be a market share erosion risk or risk of pricing?
Across the world, they will see this is such an evolving space and such a large space. There'll be multiple players, multiple winners doing multiple things. And so Fractal's focus is enterprise AI, which is the hardest part of AI, is translating enterprise AI excitement into enterprise performance. The biggest companies in the world that have complex software structures and databases and so on, and hundreds of thousands of users driving decisions inside companies using AI. So that is a space that is currently not yet taken off in a very significant way. So that was also, in that terms, there are very few companies in the world that understand it. Even Anthropic and OpenAI, etc., don't have a full understanding of how enterprises really work because they have not solved those kinds of problems. So Fractal is well placed.
So no risk of disintermediation, no risk to the business model for you.
We are the disintermediating or disruptive force that's saying that your existing technology stacks don't do a good job. Use AI to power decisions directly using these models. So we feel we are the disruptive force right now.
Has anything that Anthropic's Claude released which directly competes in the space you're operating in, any of the 11 plugins?
Not today. But we do use Anthropic, OpenAI, and our own reasoning models in order to drive this. And so therefore, it is a way in which we get better.
Okay, let's get back to business then and numbers. Now, your FY23 to FY25 revenue growth was about 18%. Now, considering you positioned yourself as an AI leader, you're an AI company, shouldn't growth have been higher?
Our growth, yes, it can be higher. And we expect, see, the big change that I am saying is that consumer adoption of AI has been phenomenal, right? For example, ChatGPT, 800 million weekly active users. It's been one of the fastest adopted technologies ever in the history of business. When it comes to enterprise, this hasn't been the case because of a very good reason, that AI excitement does not automatically translate into enterprise performance. Like I said, enterprise systems are very complex. They have thousands, hundreds of thousands of databases and the data sources, and a lot of that is structured data. So most of the AI progress has happened on unstructured data, which is video, voice, and text. When you bring it to structured data, things that can be in rows and columns and spreadsheets and so on, that's where you don't see enough AI progress. So what Fractal is doing is bringing that AI and going into enterprises and driving that adoption. As enterprise AI adoption takes off, which will happen in the next 2 to 3 years, we expect accelerated revenue growth.
So FY25 growth rate was 25%. I mean, can you, in the next 2 to 3 years, keep at this 25, 30% kind of revenue run rate?
Look, we'll be disappointed if you don't grow that fast. Okay. That is the opportunity is huge. We have to obviously execute, but the opportunity in the AI space is mind-bogglingly large.
FY25 margins were about 17.5%. In the first half of the year, adjusted margins were 15%.
Yeah.
What are the steady state normal margins for a company like yours?
Yeah, if you again look at our historical performance, margins have improved considerably over FY24 versus FY25 was significantly higher. And again, if you look at the first half of the year, it was 15% versus 15.9%. So there's always a little bit of seasonality between first half and second half of the year, as you can see, versus the last year.
So what are the steady state normal margins for a company like yours? What is the long-term aspiration on margin?
Yeah, see, our gross margins are in the 46% range. And Cogentic, which is our enterprise agentic AI platform, there the margins are significantly higher. So as Cogentic becomes an increasing share of our overall revenue, our margins will trend upwards. Even in the rest of Fractal services, we see that our margins are actually trending upwards. So we expect margins to go up, and you'll be happy if it is in the 50+ range. And the gross margins are in that range. That's where we're taking it.
So margins should trend up, and the key driver for that will be increasing contribution from your agentic AI platform, Cogentic. And that will drive gross margins from the current 45% to 50% plus. So let's talk about Fractal Alpha, which is your incubation platform. While it's growing very fast at the top line, it's still making losses. What is the internal target for turning it around? When does it EBITDA break even?
So it's already improved significantly in terms of profitability. We're already seeing some of the elements of Alpha businesses starting to break even. So we expect that to happen in the very near future.
Next 1 year?
Next 1 year.
Technology obsolescence, that is a real risk for you, right? How much do you spend on R&D, and how does it compare with global peers?
So we spent 6.1% of revenue on R&D for the last 6 months, for 6 months of this fiscal year, and we expect it to be higher. Now, typically, product companies, the best product companies in the world, spend about 14% of revenue on R&D. Services companies spend 0% of revenue on R&D, 0 to 0.5% of revenue on R&D. We are at about 6, going to 7, and potentially higher. We will expect it to be going up, not just on its own, but also as a fraction of our revenue. It'll go up. And this is important we want to be the most innovative AI company out of India, and we want to make sure that our R&D spends are reflective of that.
Let's talk about valuations. Market capitalization is 15,500 crore. Your adjusted profit for the first half of the year is 143 crore, which means if I annualize it, I'm getting a PE of close to 50 times, even accounting for the dilution on account of the fresh issue, or price to sales of 4.8 times. Who have you modeled the valuation on?
We haven't modeled the valuation on any one company. I mean, there are a bunch of companies out there that one can look at. Palantir is a great example, who's trading at phenomenal revenue to market cap ratio, more than 100 times forward revenue of. So we expect that some of that kind of transformation we can show at Fractal as well. Fractal today is, for example, Palantir did an amazing job of growing their revenue significantly without increasing their headcount over the last 2 to 3 years. We expect to,
So that's the company you emulate globally, Palantir?
Yes, Palantir is a company that we do think of highly, very highly.
All right, that's the word coming in from Fractal Analytics. The IT space continues to be in focus, a big downtick in the entire space. Time for a break now. On the other side, we'll focus on the F&O action with Mangalam after this short break.
Welcome back to Halftime Report on CNBC-TV18. As of now, Nifty is at 25,750, recovered from the day's lowest point, back in the green as of now. But we have Mangalam, who's at the F&O desk, to tell us what are the important cues in terms of the world of F&O that he's keeping an eye out on right now. Mangalam, good afternoon. Okay, yesterday we did see that run-up coming in. Today we are managing, just around that positive, negative. Nothing to complain there.
Well, the word to describe the market would probably be resilient. And why do I say that? Two data points should come up for you. The Nifty is marginally in the green or absolutely flat, despite the Nifty IT actually having fallen nearly 7%. So that's the kind of pressure that one big set of stocks is, putting on the frontline index. And the market's resilience is actually defined by the kind of up move that we're seeing or support that we're seeing from the other players, the likes of Reliance and Nifty Bank. So these factors are keeping the market fairly resilient. After a 600-point up move yesterday, we are holding on to those gains, so that's not a problem. Volatility has cooled off. So despite the tug of war between the IT and all the others which are supporting the market, the volatility index has cooled off. So that tells you that bulls aren't particularly, unhappy about the kind of decline that we've seen in the IT pack, and they believe that sooner or later this will improve. At the same time, the advanced decline on the broader markets is doing a lot better. Even though the mid-cap index at an index level is in the red, that's buoyed lower by a couple of these IT names. If you look at the crisscross lines, for most part of the day, including right now, more number of stocks have been advancing than the number of stocks which are declining. That tells you that the health of the broader markets are also fairly good. And if you look at, the put-call ratio as well, which is at around 1, which is fairly stable. On a day like yesterday and today, it could have easily gone to extremes of around 1.2, 1.3. So that's a positive. And the Nifty is now between technical moving averages, 20-day moving average and 50-day moving average. 25,500 is where I see support, and 25,820 is where I see some sort of supply coming in from a technical standpoint. And that's what the option writers are playing for as well. If you look at the active options, we're at 25,750 thereabouts. So 25,700 put writers are fairly active. They expect support at around 25,550 to 25,600. And 25,800 call writers are equally active as well. So after a big move up yesterday, the market's set itself to a much higher range than what it was trading at earlier. But a range-bound move and resilience is what we're seeing more than anything else.
Okay, range-bound move. That's what the markets are at. Thank you so much, Mangalam, for getting us all those details from the F&O markets. Time for another break. On the other side, we'll get Manisha Gupta joining with Sachin Jain of World Gold Council. Stay tuned for that conversation. You want to know what happens with gold prices from here on.
Welcome back. Joining us now is Sachin Jain from World Gold Council. Sachin, hi, thank you so much for joining in, and just so much happening in this market right now. And I have various questions to put out to you. But first of all, on the volatility, the last 3 or 4 sessions have been nothing short of creating records on the higher side, on the lower side, and then, of course, with the kind the markets are moving. How are you reading into all of this?
So first and foremost, Manisha, a big thanks for getting us on the platform. And I always look forward to your conversations because they're insightful and detailed. So, if you look at what we had talked about, and we always have been talking about the long-term sort of strength of gold and the pillars on which gold is built on, which is strongly in favor in the current geopolitics environment, in the de-dollarization environment. And I think what has happened, not just in the last week, but the last almost 15 days or 18 days rather, has been unprecedented. And it's very high volatility. It's very short-term thinking. A lot of games getting played. But as World Council, again, I'll reiterate the point that please look at gold as a long-term diversifier. And currently, in the current context, the strength that gold has displayed on a perspective of being liquid as an asset, from a safe haven, all those elements continue to stay very strong. And what's structurally happening across the globe is what we're witnessing, and also the results of 2025. We've seen that the core reason why it's also happened is the global debt, and the reason why US economy is printing a lot of currency, and hence as an outward, the confidence on gold as an asset class. And that will continue to happen.
Oh, well, absolutely. Sachin, the kind of asset class that we look at gold at, a movement of $200 in a matter of a day, with people shorting, gaining, institutions getting in, retail buying in, ETFs getting in. Is this a panic mode? Is this froth? Is this speculative money? What's your sense?
Well, actually, let's look at a lot what's happened globally, and there's a lot of profit booking that we witnessed in the initial part. Also with stock markets and very important stocks, including Microsoft, that had a negative impact in the trading sessions in America. We believe that a lot of profit booking happened in gold to suffice for the margins that were required in those markets. Now look at India. January, the growth on ETF have been a historical high. We've seen a 15-ton AUM increase in January alone. But when you look at those numbers in the last week, those assets have sticked on. So I think the confidence on gold is far different than what's happening globally vis-a-vis what's happening in India. And Manisha, we've been talking about the growth of ETF. In the year 2024, about 15-16 ton was the total growth that we witnessed across the year. And now we're talking about the AUM growth of 15 ton just in a month. And as I said, we've seen stickiness. We've seen, again, a bit of long-term play in what we're seeing as investors in India.
Oh, totally.
So we'll see.
Sachin, I was also reading the World Gold Council report for the trends that we saw in 2025. Various records being created there as well. In spite of record numbers, we're looking at record demand for previous year.
Absolutely. And I think it's been very interesting and a very strong year for gold, not just purely because the prices of gold have gone up, but also sectorally things have moved. Also, geographically, things have moved. And maybe if I can give you a small scope as to broadly what's happened globally. So the demand for gold crossed for the first time 5,000 tons, so totaling to 5,002 tons in 2025. And interestingly, of course, the largest lever or the largest growth area we saw was investment demand, totaling to about 2,175 tons. And actually, the very interesting fact that I could share to your viewers is that gold, the investment demand transaction of gold in 2025 crossed $6 trillion. And what that really means in INR terms is 18,70,000 crores worth of gold that moved on a daily basis. If you average out across the year, through the year, which makes gold the most liquid asset on planet Earth. We saw jewelry demand at 1,542 tons. We saw a consistent growth in the technological demand. And lastly, on the central banks, we saw a consumption of 873 tons. Now, that's lower than 1,000 ton that we saw in 2024, but still strong. And if you see the long tail of central banks that have bought, smaller countries, smaller central banks that have become active, we'll see what happens this year. Now, if you look at the similar time of 2025 in India, our demand for gold was 711 tons, which is almost 11% lower than 2024. However, in terms of value, it's about 35% up. If you look at sectorally, jewelry demand was about 24% down in terms of volume. But again, value-wise, it's 13% up. And I think it's a very important note to understand that jewelry demand reflects on the budget of consumers that they have. And consumers, of course, didn't increase the budget the same way the gold has gone up, but their interest in gold is an all-time high, and we believe that once there's more price stability, consumers are going to come back. We saw investment demand increase by almost, historically 73% in terms of value that has gone up. And very interesting fact has been that we track the recycling of gold that happens. And when I say recycling, I'm talking about gold getting converted to cash. And that has dropped by 19% in 2025, which again is a very interesting element of a find, because that truly reflects the confidence that consumers have in gold. And people have traded gold to gold, but the
Not gold to
exiting
cash.
of gold to other asset class or cash has been down by 9%.
Rather down. I have one final question, Sachin, and this is about the US-India trade agreement, and that really seems to be bringing a lot of cheer to various segments. And I've been talking to GJPC, where they tell me this is second Diwali for them, and they're looking at higher exports back to US. What does it mean in sense of you? How are you looking at the trade going up, and what does it mean for global gold buying and India as well?
I think from a Gems and Jewelry Export Promotion Council and from India's perspective, it's the best news we could hear. There are two further elements that will happen, which I think will amplify our exports. There's a lot of efforts that we're doing on making India as an exporter to the world. And I'm talking about gold jewelry right now, which today we export primarily to the Indian diaspora. And I foresee that with this trade agreement, it also opens up doors for us to be more competitive than, for example, Shenzhen, China, Hong Kong, various other markets. And Indian entrepreneurship will take lead in this time. And I foresee that India is not going to be just a net importer of gold, but also a net exporter with value addition, and US being the mother of all markets. And what's happened is that with gold prices going the way they are, there's a lot of emotional connect of the high-end consumer or a luxury consumer that's happening, not just in India, but globally, and an inclination to consume high-end pieces of gold. And I think I again salute to the leadership of our nation, and what we've come out is great. And I think that over the next 1 or 2 years, you'll see great amplification of Indian exports. Of course, we were leaders in diamonds, but I also foresee us become leaders in gold.
Sure.
Right.
Sure.
It's very, very bullish, Sachin, on your screen there.
Absolutely, and an interesting conversation. Net exporter of gold also is what we're keeping an eye on now. Sachin, thank you so much for joining us. Manisha, thank you so much for taking us through that conversation as well. That's all about gold in the trading session as well as going forward. But on that note, we're going to step into a very short break. Up next, we'll connect with the management of Mahindra Lifespaces and discuss their Q3 earnings. Stay tuned in.
Welcome back. You're still tuned in to Halftime Report. Mahindra Lifespaces, that's the stock on our radar, reported a good set of Q3 earnings. Their bookings, the volumes, collections, they were up on a YOY basis. Let's get in Amit Kumar Sinha, MD and CEO, Mahindra Lifespace Developers, joining us now. Mr. Sinha, thank you so much for joining in. Well, yes, there's an increase in Q3 bookings and volumes as well. But if I look at the 9-month sales, they have come in at 1773 crore rupees. FY25 sales were at 2800 crore rupees. Do you think you'll be able to surpass last year's bookings, considering that the quarterly run rate so far has been around 500 crore rupees?
Yeah, so thank you. I think we will be able to surpass our last year numbers and hopefully show a healthy growth. Some part of that is driven by the launches, as you touched upon. We just an example, we had a very successful launch of a project called Mahindra Blossom in Whitefield, Bangalore. It has done in the 3 days of the last to last weekend, it did more than 1,000 crore itself. So actually, we are hoping to see a significant growth driven by some of these launches. So one of them is Mahindra Blossom. We're expecting a couple of other launches to come through. But more importantly, for the launches that we did in early part of the year, as well as the phase launches of the previous projects, that will give us growth momentum. But I think we see good opportunities across all of our markets, Mumbai, Bangalore, and Pune. and these launches are just an evidence to show that there is momentum in the market for our kind of products, for our kind of value proposition.
Right, Mr. Sinha, but could you quantify these launch numbers for us, and how much in Q4 and how much would come in FY27?
Yeah, so we are looking at maybe 2 to 3 big launches coming in the next 3 months, and I'm not constraining it by the end of financial year because sometimes the launches spill over the March 31st deadline. But we have roughly, I would say, anywhere from 7 to 8,000 crore worth of launches that are going to happen towards the end of Q4 and the start of Q1. So combining some of that together. Exact RERA dates, exact launch dates are not yet known. We are pushing hard to get them sooner. But this is very important because for the next year, I've given a guidance of 4,500 to 5,000 crore for our pre-sales on the residential side. And that's something that we are really looking forward to by having these launches locked in the early part of next financial year. And hopefully some of the Q4 launches will actually have a very good soothing effect for the pre-sales velocity in the next year.
Okay, Mr. Sinha, the big talking point, of course, has to be demand trends, realty index coming off the 52-week high, many stocks at lows as well. Do you think we're towards the later part of the real estate upcycle?
Yeah, no, I wish I knew the perfect answer to that, but let me give you 3 points here. The first point is there are some signs of moderation in the market, especially in certain segments and certain micro markets or specific cities. For example, NCR, we see a significant slowdown. We see slowdown in a luxury segment. So I think there are markets that have this characteristic show up. But overall, if you look at the overall, like we look at inventory overhang, like how much of inventory is there that is in the market that the customers can buy. It has moved up only 10% from 13 months to now close to 15 months. That means if there are no new launches coming into the market, all the inventory that is there will get absorbed in the 15 months. It was 13 months 2 years back. So it hasn't been very significant shift on the inventory overhang side, but there is certain pockets, certain segments where you see slowdown. So that's the overall market, I would say. The second is it's very important for us to be clear where we play. And it's good that we are playing in Mumbai, Pune, and Bangalore. And third part is as things slow down, and we expect some part of it to happen and then get corrected over a longer period of time, there is a shift towards branded developers, shift towards quality developers who have multi-year track record, who have always met customer expectations, exceeded customer expectations by designing the product well, but also delivering them on time in line with their expectations. And we players like us tend to stand out quite well.
Okay, all right. Mr. Sinha, thank you so much for that honest answer. That's the word coming in from Mahindra Lifespaces. They continue to see growth and new launches. But yes, there is some moderation in select micro markets. With that, we'll slip into a short break. When we come back, we'll talk more about markets, get you some stock-specific action as well on the other side.
Welcome back to Halftime Report on CNBC-TV18. Like you can see, the Nifty as of now, 25,700 around that mark of the day's highest point, of the day's lowest point. But resilient day is what is coming in for the markets. Broader end of the market, though, managing to hold on to better gains in today's trading session. And that's what we are keeping an eye out on. So
yes, absolutely choppy, flat for now, but we'll keep an eye on what the moves in the later part of the day are. And with that, we'll take your leave on this edition of Halftime Report. Thank you for tuning in. Business Lunch comes up next.